Lowcountry Money Talk. We're at the desk. We're ready to talk money. We're joined by Phil Bloyd with Revolutionary Financial Group, our resident expert here. Thanks so much for being here.
Good to be here, Jessa.
I am excited about today's show because I really need to get caught up on what's going on.
Sure.
And I know just the man for the job.
All right.
For our folks at home, we're talking about retirement, and we're going to discuss a little bit about what it is that you really need to save for retirement. But first, we need to understand what's going on.
Sure.
So
update.
Give us an update.
Right. So the Consumer Price Index came out. It was for June, right around 3% inflation. Now we have to think that the energy costs have gone down a little bit, the gas prices, so that's probably helped a lot because a lot of that is figured around that. But just remember, it's 3% year over year on top of the 9% it was last year.
That's the thing. It's tricky because 3% sounds not too bad, right?
Right.
But we're already up.
Right, so it's on top of the 9,
yeah.
so I mean, that's still a big margin. So when we go to the grocery store, we still notice that everything's very expensive still.
Absolutely. Yeah. Oh yeah, you check out $200 doesn't get you but a few bags these days.
I think I got like 3 bags for $150 or something.
Yeah, it's not what you're expecting. We should be practiced at these higher prices, right? But it's still giving me sticker shock.
Yeah.
Okay, so let's talk a little bit about that in terms of just what's happening in the stock market and how what's happening with their bottom line.
So let's see, the first 6 months of this year, pretty good for the stock market, although concentrated in a handful of stocks, which we don't like. We do and don't. We like them because maybe we have them, but we want more of a rally. So now we're hearing a magnificent 7 stocks or things of this nature. So these handful of stocks have added so much to the NASDAQ 100 index that they're going to rebalance it. Well, we don't hear that very often. So I believe the 24th they're going to start that rebalancing or whatever. So we'll see what happens there.
Okay.
I don't know that I like that concept, but we'll see.
Okay, so there's a handful, 7 stocks that are really doing well, and that causes this shift, this rebalancing. Okay.
Well, it's starting to spread out a little bit more into some others, so we would like to see more of that. Don't get me wrong, I'm happy that we're up in those 7, I would say 7 to 10 stocks, but now we're seeing it kind of spread to some others. So we want to see more of that, where more of the market sharing in these
some options
moving
for
up
people.
Of these stocks.
And up, I mean, they are up, but they're up from a loss.
Yeah,
right?
so just remember the NASDAQ last year finished the year down about 35%, and the S&P 500 index was down about 20%. So just because we're back 35% when we were down 35%, that doesn't mean zero. Okay, you're only up a third of what the loss was. So if you participated in that whole downturn last year in that index, you still got quite a ways to go.
You haven't bounced back
Not yet.
Okay, but we're seeing some rally in the market, and hopefully
we like that.
Yeah, we like that. All right. So let's talk a little bit about these two sort of things in terms of how much do we really need in retirement. There's a survey that says, and this is about belief, that Americans believe they need $1.27 million in order to retire comfortably. What say you about that number?
Well, it's on an individual basis. And the great question you had, is that per person or per couple? It doesn't really say. So, what I would say, retirement is a couple thing or an individual thing. So some people have a huge pension in retirement, and that takes care of them, so they don't really need to dig much into their savings. Other people may have little or no pension, and they have to go more into their saved investments. So our viewers will know which one of those they are, but we would need to do that income report, the Revolutionary Financial Review, and see what that looks like.
And it's so smart to do that. Just really dive in, take a look, and you need to know where you're at, so you know where you need to go. Super important. Can be scary, but it's important to do that. All right, well, we've got a lot more to talk about here on Lowcountry Money Talk. We hope you'll stick with us after the break.